All right. Well, welcome everybody. My name is David, and I get to be your panelist and also your moderator to this exciting webinar on marketing for purchase loans. We had almost 700 people register for this webinar, so if you're experiencing any technical difficulties, we apologize. We are recording this webinar, and we will provide you with a copy of a recording for those people that were unable to watch it or who want to watch it over again. We have an action-packed 30-minute webinar, so if you're multitasking, take this 30 minutes and invest it into your business, because what you're going to hear in the next 30 minutes is going to revolutionize the way that you've thought about purchase marketing. We've got an urgent update on the Mortgagee Letter 2013-26 with a special marketing opportunity. We're going to go through specific information of what you need to know to leverage that new opportunity and that new niche, and we're not going to hold back any punches. You're going to hear from one of the industry's top mortgage marketing experts, and he's going to break down the specifics of what you need to know to grow your business and take this little increase in interest rates as a positive for your business. You're going to take the special marketing opportunities we're going to talk about today, and if you leverage them, you're going to separate yourself from the competition and explode your business opportunity. My panelist today is Jeff Bush. He's the president of OverflowWorks.com. He's got 20 years of direct marketing experience, and the guy's done over 1 billion direct mail pieces for the mortgage industry. He's got a vast amount of experience. He's also got hands-on experience in owning a mortgage banking company that closed over 5,000 loans from 2000 to 2007. So it's not every day that you come across a person that actually has mortgage experience that is talking about something as important as generating incoming qualified leads for purchase marketing. And I'm excited to have Jeff on the webinar today. Jeff, are you there?
Yeah, I'm here. Thanks for having me on the call, Dave. Appreciate it.
Well, as you've graciously provided us with so much knowledge and expertise over the months, today kind of embarks on a new era of mortgage marketing, an area that has been somewhat challenging for a lot of mortgage professionals, and that's the area of purchase marketing. Jeff ended up just closing out on his audio, so we're going to come back to Jeff in just one moment. But in terms of our experts, we've also got an expert panelist from one of the top mortgage companies in the country that is offering the new mortgage offering in terms of the mortgage niche that's out there that many of you have already known about in terms of the Mortgagee Letter, and giving you the hardship opportunities that have been preventing many qualified home buyers from qualifying for a home loan. I'm going to throw it over to Kathy, and I'm going to have her talk a little bit more about this awesome opportunity that has come up with this exciting mortgage niche. And we're going to bring Jeff on just as soon as his audio comes back in. But First Mortgage Corporation is one of the top mortgage companies and has been one of the top mortgage companies since 1975. Kathy is one of their top leaders in the company, and she's going to talk a little bit more about this exciting new mortgage product. Kathy, are you there?
Yes, I'm here. Hi, everybody. I'm so excited to be on your webinar today, and was really honored to be invited. I have a lot to live up to now that you said top performer up there. So we have been in business since 1975, and we actually specialize in our FHA no FICO score. So when the Mortgagee Letter came out regarding this particular little niche, I was really excited, and working with Jeff and his marketing company has just expanded all of that. So the back to work slide, is it, can you go to the next slide?
Yeah,
hey, Dave, I'm back. I don't know what happened there. I'm on a landline.
That's all right.
I vanished.
We'll come back to you in just a second. Kathy's going to talk a little bit more about this back to work extenuating circumstances loan, and then we'll get back to the marketing in just a second.
So the back to work, the extenuating circumstances that FHA is now allowing for the borrowers to come back in within, right after the 12 months of the circumstance, the event that relates to that is reduced income of 20% or more due to loss of employment, income for one person or both persons, it's for the complete household, and that it lasted 6 months. And it really it doesn't have to be just on the loan it affected. It could be the financially affected in other areas. So you can talk about reduced bonuses, unemployment, lesser overtime, reduced hours, the furlough days that the state of California had. I don't know if other states had that. And then all they need to do is reestablish their credit for the past 12 months. It has to be 12 months since a significant event. They have to have had a short sale judgment, something like that, the 12 months hit. And then what we do is we verify it. Anything that can be verified can be overcome with after the 12 months. We verify the 20%. We can verify it with checking accounts. We can do it with W-2s, statements from the employers. I'm sorry, I'm at a loss. I apologize. I'm a little nervous. I'm not used to talking in front of hundreds of people. So
that's all right. Well, in terms of this mortgage niche, I mean, this is almost like a return to maybe the glory days of subprime lending, but for people who have really had extenuating circumstances. Isn't that what it's really meant for, Kathy?
Actually, it is set up exactly for the people who were set up and had a significant event that changed their lives. And what we're doing at First Mortgage, and always have, is we actually look at the total picture. Now FHA has come back and said, know that you're not bad people. You had a bad circumstance, and after a year, we'll look at your situation. And if they kept up with everything and their 12 months is good, we don't at First Mortgage we don't have a credit score difference. However, there are some companies that do, but we really look at the total picture. So. You can expect to document every detail of the significant event. However, there's a nice solid future on the other side for homeowners.
Great. Well, stay tuned, Kathy. We're going to come back to you in just a moment, but thanks for giving us kind of the highlights on this. We're going to come back to you here at the end of the webinar and ask you a couple of questions that are being submitted by the panelists or the participants today. And for those of you that are participating in the webinar, if you'd like to go ahead and submit a question about this hot mortgage niche, or if you want to ask a question about the marketing, use the GoToWebinar control panel over there on the right-hand side of your screen. I'll be conducting the questions on kind of a first-come, first-served basis, and I'll be asking these questions to Jeff and to Kathy as we go through today's webinar. But we're going to try to accelerate our webinar time and make sure that we finish on time for everybody to get the most out of this 30 minutes. So we're going to talk now about marketing strategies to target purchase loans, and talk about this abundance of 2 million more buyers in the market with an exciting new mortgage product. And so, Jeff, I'm going to bring you back in here and have you talk about this exciting opportunity, and talk a little bit more about your background in terms of mortgage marketing.
Well, Dave, I've done direct mail marketing for mortgage companies for almost 20 years, as the introduction slide said. I mean, over a billion pieces of direct mail for every kind of product imaginable. I mean, back in the second mortgage, 125 days doing direct mail for that. FHA, VA, Fannie Mae, reverse mortgages. I mean, I just have a long history of doing a lot of marketing for mortgage companies. So, I'm always looking for niches that look like we could exploit and do a whole bunch of loans. And let's be honest, interest rates, I think on Friday were, 4 3/4. I mean, there's just less and less people that are going to benefit from refinancing right now. I mean, we've really moved from a heavy refinance market over the last 2 years to all of a sudden very little refinance market. So, we're changing gears, and I've got 100 mortgage companies around the country that pay me to make their phones ring, and they would like me to make their phones ring from qualified borrowers for loans they can close, and that is getting tougher with rates going up. So we still have some refinance marketing working, but working on this purchase campaign, when I heard about HUD announcing the Back to Work program and reading the mortgagee letter, this is a huge deal for the next 12 months. I think it'll be a hot niche that there'll be thousands of loans, funded off this particular product. There's a ton of people that have had a bankruptcy, a foreclosure, a short sale in the last 12 to 36 months. A lot of these people think they have to wait 3 years to go do an FHA loan, 3% down, and go buy a house. A lot of people really think they have to wait 7 years, because there's a lot of loan officers out there that don't really know the FHA program well, and people are looking at conventional loans where they got to wait it out, 7 years. So the announcement of this program and the slide that you're showing up on the screen, this is a list of how many people discharged a Chapter 7 bankruptcy in the last 12 to 36 months that, as of 2 weeks ago, they could not buy a house. With this new announcement, 12 months out of their bankruptcy foreclosure short sale, they can go buy a house FHA with 3% down. That's kind of a crazy product, and I think it's a great time to market it. So, looking at this slide, there's 306,000 people in California that discharged a bankruptcy in the last 12 to 36 months that don't know they can go buy a house right now, and now all of a sudden they can, as long as we can prove the 20% drop in income. A lot of people in this list had foreclosures, short sales. I think a lot of realtors have gone through a tough time financially, and a lot of realtors don't even know that they can buy a house right now with a 1-year-old bankruptcy foreclosure short sale. So this message, getting this out, and you being able to offer it to clients and even referral partners could be a big jump in your business.
Well, Jeff, you kind of specialized in mortgage niches when you owned your mortgage company, and one of the things that you've always kind of stayed away from is purchase marketing, and now you've kind of found that marketing niche for purchase marketing. Talk a little bit more about the key indicators that you're looking for when you're trying to find a niche, and then helping your mortgage marketing clients to leverage that niche.
Well, obviously, a mortgage product, the mortgage business, we call it niches to riches, right? When we have a niche, like I can do a loan 12 months after bankruptcy with 3% down, that's a pretty hot niche. And then if we have a huge audience of people that qualify for that loan, 300,000 people in California, and then, of course, if your mortgage company is going to offer this loan, or you can find a banker-broker relationship with lenders that are going to be able to fund these loans. It kind of all comes together. Great list, great offer, great back-end funding support, and we can do a lot of loans on this thing.
Great. Well, I've got a poll up right now. I'm just trying to get an idea of our audience today. We've got over 700 people, or almost 700 people, registered for the event, and they're just continuing to come into the webinar as of right now. If you've just joined us, welcome. We're just getting kicked off on this purchase marketing webinar specialty program. Cast your vote, and I'll close the poll up, and I'll share the anonymous results here with everybody else, just so you can kind of get a feel, Jeff, of who's on the webinar. Now, if you can, Jeff, talk a little bit more about some of the test campaigns that you've run, and then we'll get into some of these marketing letters and show everybody what you've been using to generate a good response.
Yeah, so we're going to show a mail piece here shortly that, was designed. This mail piece was actually designed before the HUD Back to Work program came out. Literally just a couple weeks before, I started mailing letters to people that were renting homes. We're not mailing people renting apartments because they don't typically pay as much for rent. So if they're renting a home, they had to come up with first and last month deposit, probably have a little bit more income, definitely paying more in rent per month. So we mailed this letter to people that were renting homes, and it's not up on the screen right now, Dave, but I've got a copy of it. And what we did was we said, hey, call us to find out if you can buy a home. Here's kind of the guidelines for conventional FHA, VA, Fannie Mae Home Path, and USDA loans, and just kind of let these people know that, after a certain amount of time, you're back in the market to buy a house again. So that's what this mail piece was designed for, and it was before the Back to Work program came out that changed everything, where now we only need 12 months seasoning on BK Foreclosure Short Sale to be able to, get them in a purchase loan.
Able to see the webinar? Are you able to see it now, Jeff?
I'm not. I'm just seeing that I'm connected, but let me try this one more time. There we go. I see it now. So yeah, this was the mail piece. We said, home purchase offer. It's a government loan, obviously. We mailed this to the future homeowner and again, we mailed people renting homes, so non-owner occupied properties that we knew were rented. And, we mailed out letters and got a great response and got a bunch of borrowers in with their documentation, pre-qualified them, and we sent them out with our real estate partners to go find houses. So it's working well. This is one of the campaigns.
Well, you've also tried some different types of letters, and we'll get those in just a moment. But Jeff, in terms of your background, there's a lot of different marketing strategies when it comes to direct mail. There's the letter in the window envelope. There is the snap packs, the ones that actually are perforated. and then there's the postcard option. What would you say is the most highly responded to program or highly responded to vehicle?
Well, the best direct mail pieces are typically either a letter and envelope or a snap pack that tears off on the sides and gets them to interact with the mail piece. And, it gets you 10 or 15 extra seconds of their time once they open the letter to actually read your offer. Postcards get looked at right when they get them. They don't have to be opened, but they just never respond as well as a letter and envelope or a snap pack kind of tear apart mailer. So I've done millions of postcards and hundreds of millions of letters, and a postcard can never get as good of a response as a letter has been all my testing. So postcards might be 25% cheaper, but the response is usually half, so it's not worth doing the cheaper marketing just because your message is going to get seen in the mailbox. You don't need your message to be seen. You need it to be responded to, and letters just do a lot better job of making that phone ring.
And Jeff, what was different about this purchase marketing letter number 2 that you did for your client?
So here is the simple offer going out to people that had a 12 to 36-month-old bankruptcy discharge. Find out if you're eligible to buy again after a short sale BK foreclosure. Purchase this $310,000 home for only $1,500 a month. Chances are they're paying more than that in rent. As little as 0 down, we can do some VA loans, obviously, on this. Not on the Back to Work program, but some people might want to use their VA benefit and do 100% financing. So the message is, special alert, FHA's reduced the waiting period to fund your loan to 12 months after bankruptcy. We're proud to offer you this loan with 3.5% down, even if you had a recent bankruptcy. So this is a great offer. Buy a house with 3.5% down, mailed to a great list, people that discharged a BK 12 to 36 months ago. So anytime you get a great list and a great offer, that's going to get the big response rate, and then if you can close the loans, obviously.
But Jeff, one of the things that you've mentioned is the real PowerPoint for this particular opportunity is that a lot of your mortgage marketing clients have not been fond of calling on realtors and being in the slave position. And you've been able to kind of equip them and build them into more of a powerful referral source so that you are actually, becoming a more respected business partner with some of these realtor agents or real estate agents. Talk a little bit more about how you've created those relationships for some of your mortgage marketing clients and how you've helped accelerated some of the relationships that have maybe been already in existence.
Well, let's say that you're a loan officer or you own a mortgage company with a bunch of loan officers and, 75% of your business has been refi for the last year or two and enjoyed the success of, funding all these loans. And now all of a sudden you want to call on realtors. Well, it's going to be you and 50 other loan officers calling on these realtors asking for their business. And, these realtors have long-term cemented relationships with their loan officers that you're not going to break real easily. But if you were to do a mailing and you've got 10 or 15 pre-qualified buyers and you take those buyers and introduce them to these realtors that you're trying to get in the door with, all of a sudden the realtor, they're not going to turn away a buyer that they can make 3% commission on a, $300,000 home. So it could be a way to get in with some of the big realtors that you've been trying to, to get in the door with to do their referral loans for them to refer you to do their purchase loans. So if you're bringing them pre-qualified buyers, it'll probably get you in the door to talk to some of these, high-producing realtors that you want to get in with. Whereas if you're just calling them saying, hey, I'm another guy that can do your loans, I mean, it's a tough road to go build realtor referral business. But, bring them something, and all of a sudden the relationship could continue and referrals could start coming in.
Jeff, dig into this home renter data and talk us a little bit more about the qualifications and how you came up with this data.
Well, these are all the people in the United States that are renting right now. They're renting homes, not apartments. So we've got 2.2 million renters in California that, could be in the market to buy a home right now. So this data is just all renters. We don't know if they had a bankruptcy, foreclosure, short sale, although we know a lot of those people end up renting for a while. That's typically why you're renting, is you don't have the credit to buy a house or you don't have the down payment or, so this list is not specific to having a bankruptcy discharged in the last 12 to 36 months. I think that list is going to be a lot stronger, a lot more response, but a little bit tougher borrower. There's going to be issues, and those loans are going to take some work to get them funded. But this list is just all renters in your market area that we could mail to. If you don't want to focus just on the bankruptcy data or foreclosure short sale data, you could just mail a generic list of renters, knowing that a lot of these people are, could be in the market to buy, and you'll get some loans off of this.
Great. Well, we're going to go to the next purchase mailer that you've had success with. And if you want to just go ahead and break down this particular mailer, Jeff, and then for those of you that have submitted questions, we're going to get back to some of the details about this new mortgage marketing opportunity and bring in Kathy, our expert in the mortgage area, and she's going to talk a little bit more about qualifications and who does and who doesn't qualify. So stay tuned if you've got some questions on that.
Yeah, so here's a letter that we sent out, just a simple letter in an envelope that just went out to renters telling them, hey, let us show you how easy it is to become a homeowner, 3% down. I mean, this client's in Missouri, so the average purchase price, I don't know, $150,000, $200,000 homes in this part of Missouri. So we showed, hey, a $150,000 home loan is only $652 a month. We're showing them a really strong, offer to buy a house with little down and low payment. It's obviously an FHA loan, talking about all the benefits. Now, this was a while ago when rates were down, so I'm showing 3 1/4. So obviously rates are higher and payments are higher, but still going to be attractive. So we can mail this letter to renters and get a bunch of calls coming in from people that want to buy homes, and again, pre-qualify them, send them out with your realtor.
Jeff, inside the webinar, we had some people that are asking about the question about making 8% on a transaction. Can you explain a little bit more about what 3% plus 3% plus 2% meant?
Yeah, so some of my mortgage companies also own real estate companies, and I have been doing some direct mail to people that look like they're ready to list their house, like they've been in the home for, say, 4 years. The average person stays in the home 4 years, so we've been marketing like 3 to 5 years they've been in the home and mailing letters about listing their property for sale. So we're direct mailing to get the listing. We pick up the listing. Then we direct mail the buyers and pick up the buyers. Then we pre-qualify them and we do their loan. So if you're a mortgage company out there that owns a real estate company, you could make 3% on the listing, 3% representing the buyer, and then make 2% on the loan. So we're talking about 8% commission on a $300,000 deal. That's $24,000. This mailer might cost you $3,500 to try it, or $6,500 on 10,000 mailers. So basically, if you do one deal and you could triple end it, represent the the seller, the buyer, and do the loan, we're talking about $25,000 commissions per transaction. So one deal would be profitable on the whole mail campaign, and I think we can generate 5 to 10 deals off something like this. I mean, I've proven that I can. So yeah, the whole 3, 3, and 2 is basically if you can get the listing commission and put the buyer in your property. So it only applies if you own a real estate company, and not everybody does, and not everybody wants to go compete out there with their realtor referrals and be in the real estate business. So it doesn't work for everyone, but I think if we can triple in these transactions, or what if you only got 2 out of 3? You represent the buyer and do the loan, you're making 5% on whatever the average home price is in your market area. It's a huge revenue and could be, pretty big thing for growing revenue and doing purchase loans as we move into this purchase market.
Well, Jeff, you've mentioned that the numbers, 10,000 direct mail pieces for $6,500. Talk a little bit more about how many incoming calls and what the conversion rate is. You said that you'd like to get potentially 5 transactions out of that just on the loan side. But talk a little bit more about the incoming calls and what somebody can expect in terms of call volume.
Well, if we did a 10,000 piece mailing, we say in the mortgage mail business, hey, a 0.5% response is kind of the average. On this bankruptcy list, we've seen over 1% response. So if you get a real targeted list with a hot niche and a great offer, you can get a 1% response. So 10,000 mailers, you got 100 inbound phone calls. If you could convert even just 10%, you're funding 10 loans. Maybe the realtor's got, 10 buyers that they're out there finding them houses. So On the normal renters list, if it's not targeted towards this whole bankruptcy back to work program, we're saying, hey, average response rate's been about 0.5%. So 10,000 mailers would be 50 inbound phone calls and 5 closed loans. The exciting part about purchase money marketing is the loan amounts are huge. I mean, we're doing this here in Temecula, California. The average home price is $350,000, and a lot of these buyers are either doing VA loans or they're doing FHA loans, only putting 3% down. So our average loan amount is going to be well over $300,000 in Temecula, California. So just look at the market area you're in and what the average home price is. And, you know, our average refinance loan, you know, has only been like $200,000 for a refi, but the purchase looks like it's going to be $330,000, you know, $340,000. So it's almost double the size. We're going to make more revenue on these purchase loans than we ever made on the refis.
Jeff, you've had some people that have not necessarily owned real estate companies, but you have had them kind of partner up in a strategic way with real estate partners in kind of a strategic referral partnership and share some of the marketing costs to be able to generate more business for everybody. And one of the ways they do that is through home buyer seminars and promoting properties in a mailer. And we've shown a couple of slides on that, but just for the sake of time, can you summarize how that's worked and how you've seen some of these responses for the buyer seminars?
Well, if you're going to go mail 10,000 pieces and try to get, you know, 50 to 100 incoming calls or get these people to show up to a seminar, I mean, if you're going to close 5 or 10 loans off it and you spend all the money yourself for $6,500 to do the mailer, you can still make money doing just loans off of this. But if you're going to bring a realtor in and they're going to go sell 5 houses at, you know, $300,000, I mean, you're talking they're making $18,000 in real estate commission when they sell these homes. It makes a lot of sense to me to have these realtors kick back half of the cost for the advertising. Kickback might not be a real good word. Hopefully HUD and CFPB isn't listening to my webinar. Didn't mean that. Anyways, you know, if the realtor could pay 50% of the marketing cost, because they're going to make more money than the loan officer is. So if you could, you know, get the realtor to split a cost of a seminar or the direct mail campaign, you might have to do the first one on your own and bring them some buyers and watch some deals close. But once they see these things close, I know 1,000 realtors that would love to spend $1,000 or $2,000 in direct mail to make a, you know, $18,000 commission. So it could be a good way to, you know, get some of the advertising costs split.
Well, we're going to get to Kathy and have her talk a little bit more about this this unique marketing niche and the new program that's been released by FHA. But in terms of your marketing, Jeff, if somebody wants to understand more about what you do and how it can be customized for them, you know, best way to get you, I'll close this poll up here in just a moment to show Jeff's contact information, but walk us through that process. How fast can you get my phones to ring in the month of September, Jeff?
Well, if you called me and said, hey, Jeff, I like that letter, put my name and NMLS license number on it and let's get it going, you know, it takes me 3 days to print and mail something and it takes about a week for the mailers to arrive in the mailbox. So I tell people, if you're really moving on this thing, we could have your phones ringing in 2 weeks. The average is probably more like 3 weeks from the time they call, by the time we get the proofs perfect and the data pulled and mail it and get to the homes, depending on, you know, what state they're in and how long the mail takes to get there. It might be 3 weeks to make their phones ring, you know, speeding it up to 2 weeks sometimes. Just depends on how fast we get artwork signed off and data pulled and selected by them. So,
how about list exclusivity? Got a lot of questions about how many times you resell the list in a specific market.
Well, if somebody buys a mailer from us, we take the data that they buy and just suppress it for 90 days and don't allow anyone else to mail it. So they would have an exclusive where we're not going to mail 2 letters to the same borrower from 2 different mortgage companies. I mean, that's kind of cutting our own throat on us getting a reorder and continuing this every month with our clients. So there's plenty of data out there. We're not doing that much purchase money marketing yet. It's just kind of coming into fruition right now. So I don't have a ton of clients out there mailing for purchase. We just started this with, you know, rates continuing to go up. We're just backing away from some of the refinance direct mail campaigns that, you know, has been 90% of our business for the last 2 years, and all of a sudden, you know, switching to this. So they would have exclusivity.
Great. All right, for those of you that want to get jump-started on their marketing, you can see it on your screen. Best way to contact Jeff, and I know that we do have a significant number of people that are watching this webinar. They're going to be reaching out to you, Jeff. Best way to contact you by phone, by email? What would be the best approach?
I would say send me an email and just be detailed on what you want. You want to see counts for bankruptcies. You want to see counts for renters in your market area. Give me the 25-mile radius around your zip code. You want specific counties, specific states. Just be specific about what you'd like to see numbers on, and I'll show you how many of these prospects we have to mail right in your market area. So if they send me an email on what areas they might be interested in marketing to, that would be great. And then I'm going to send the presentation out, so they're going to have different samples to review and say which sample you might want to use. So I would just say for today, email would be great, and I'll respond to everybody within 24 hours. So that'd be the best way.
Well, Jeff, talk a little bit more about why you brought Mortgage Corporation into the webinar, and then I'll throw it over to Kathy, and we can take some of these questions that have been submitted on the Back to Work program.
So First Mortgage Corp's been around for 40 years. Okay, very successful company, privately held. Huge, reserves in the bank. They're not going anywhere. I like the company. They're based here in Ontario, California. Their specialty is low FICO FHA and VA loans. I mean, they were funding 1,000 loans a month. FHA with very low credit scores when no one else would touch them. So First Mortgage Corp does a lot of manual underwriting, so they're kind of already in this niche of low FICO borrowers, specifically FHA, VA. They're very good at it. Their rates aren't going to be the lowest rates in town, but we don't need to sell the lowest rate in town to a 12-month-old bankruptcy foreclosure customer. So I think that the reason I invited Kathy, who's obviously a wholesale rep for First Mortgage Corp, on the call is to kind of explain that they've already been doing these loans for years. They understand them. So when this HUD thing came out, Back to Work, it's pretty much like second nature for them. It's not like, I'm sure Wells Fargo and all these other big lenders are trying to figure out how to do these loans, if they're going to do these loans. I've been hearing there's a lot of lenders, big ones out there, Guild Mortgage, W.J. Bradley, that are all discussing whether they're going to roll this out or not. And First Mortgage Corp's already got a big pipeline of loans and already funding them when everyone else is just thinking about it. So I was pretty excited about that. They're just in this niche already. They're licensed in 10 states, the entire West Coast, from Texas to Washington, Colorado, California. So they're only licensed in those 10 western states. And there's going to be other lenders that are rolling out their HUD Back to Work loan programs shortly. But I just thought to give everybody kind of a heads up on this. If you're in those states, at the end of the webinar, we're going to email something out that has a copy of First Mortgage Corp's rate sheets, how to get approved with them if you want to get approved. If you're already approved, call your rep. A couple other things that we're going to send out, that are pretty exciting for this particular loan program.
Great. Well, we have Kathy back on the line now. And Kathy, we only have a few minutes. We're already a few minutes over. But over the next couple of minutes, can you just kind of go through some of the top 2 or 3 things that the participants in this webinar need to be aware of about this Back to Work program?
Well, the main thing is the rebuilt within the 12 months and making sure that they started reestablishing their credit. The clients will have to go through housing counseling, and it has to be longer than 30 days, but not longer than 6 months before the transaction. And to really check out your lender, although a lot of companies are going to be offering this, check their overlays. First Mortgage has no overlays on this mortgage letter, so we do it just as it states inside there. But as most bigger companies do, they do have some overlays. Those are the biggest things. And document. There's never enough documentation. The customer can find the reason of their 20%, and when you add up a number, 20% is not that high, and it just had to last 6 months, and people can prove that.
That's great. Anything else in terms of First Mortgage Corp, if they wanted to be able to contact you, is that the best person to contact in regarding to getting approved or asking more questions about this particular loan program?
I am always open to having brokers contact me. If you already have an AE with First Mortgage, of course, make sure you go through them. If you haven't talked to First Mortgage before or in a long time, go ahead and email me. My information's up on the screen. You can call me, you can email me, you can talk to Jeff. He can get you in contact with me, and I can answer most questions. And I can also look and see if you've been active before and wanted to reestablish.
Great. And these particular links that you're seeing on the screen are not active, but when we email out the PowerPoint presentation, you'll be able to click on those links and get access to more information about First Mortgage Corporation. So, hey, we thank you all for participating with us. We're sorry we went a few minutes over. Thank you to Jeff Bush, who gave us such great advice in terms of marketing to generate more purchase business. And thank you to Kathy from First Mortgage Corporation for giving us a heads up on what's happening with this Back to Work program. We wish you all the very best in your first